So there's been a lot of chatter lately about the premiums on silver coming down, and I'm really excited about that. The premiums have been way too high. They've been almost nutty lately. And the last few months, we have started to see them move down. You're starting to see Eagles under 10, rounds under 3. Really exciting to see this happening. But at the same time, the spot price has been going up. So you're still not really getting silver much cheaper than you were, say, 3 or 4 months ago. But like I said many times, if I were going to pay $27 an ounce for silver, I'd rather it be 24 plus 3 than 21 plus 6. Now that seems stupid because at the end of the day, you're spending the same amount. But if you think about it, if you're buying at a lower premium, that is a smaller number that you need to cover whenever you think about turning around and selling your silver later down the line, if that's what you plan to do. So what we're going to do today is get some even more insight from someone who knows way more about it than I do. We are joined today by James from our sponsor, SD Bullion. We are going to talk about spot price. We are going to talk about premiums and demand. Let's get James in here. James, how are you today?
Good. It's a pleasure to be here. And I want to give you kudos for your channel in general. I've seen a lot of it on YouTube lately and done a really good job of educating people about price discovery power and how they have a lot of price discovery power when they shop around. So kudos to you and your channel for all that work.
Oh, thank you, man. I put a lot of time into it, but I definitely love it. It's rewarding for sure. I wanted to talk to you. It's funny you talk about that. I wanted to start off with premiums. I mean, that's been kind of a hot topic lately. And specifically, we've seen them coming down. So I've seen a lot of comments. I've done a few videos covering premiums recently. And people are, they're commenting that they believe premiums are just coming down because the spot price is going up, which those two, I mean, you're going to tell me because you have way more industry insight than I do, but the physical silver sales don't really affect spot price at all. It's mostly paper and future contracts, et cetera, right?
That's correct. In terms of the retail investment grade silver and gold products that you're buying or that anywhere in the world is buying, it doesn't really affect too much day to day the spot prices of silver and gold. I mean, there's a certain percentage of the higher net worth houses that move those products that do hedging on the COMEX, but the amount of futures contracts involved in proper price hedging is minuscule compared to the amount that's out there on the speculative side of things. So for the most part, day to day, what you see on spot price is the result of speculative bets, whether or not they're winning on the long or short side.
Gotcha. So what do you think really affects premiums and why are they coming down right now then?
Premiums are usually a result of a combination of factors, mainly demand in general, just overall, how many people are buying and at what levels and in what volumes and how much in terms of the industry has ready for available delivery immediately, whether, sitting on a shelf or just coming out of the mints. And there's only so much capacity in terms of the bullion industry. So at times when there's outsized demand, the only way to guard that supply that you have, that limited supply, is to raise premiums. And if you don't do that and you sell off at too low of a premium, then you get caught in a situation where A, you don't have enough currency to keep the lights on and pay your workers. B, you don't have any inventory to sell. And then where are you as a bullion dealer if that's the situation?
No, that makes sense. So basically, to put it in layman's terms, if you sell it too low, you won't be able to replace it to be able to resell it again.
That's true. And then the other part as well, a lot of people don't realize most coin shops don't do proper price hedging. Is in terms of SD Bullion, we do not use much in terms of futures contracts for price hedging. We more or less keep a cash allocation and an inventory allocation. And we have a position in bullion and precious metals, and we're comfortable with that position, whether or not the price is moving in a volatile fashion. We can stomach that.
Okay. So what's going on with silver prices right now? Obviously, it was a rocky 2022, but Q4 looked really strong. It's still looking strong now. What do you think we're going to be looking at this year?
Well, yeah, obviously the DXY, the thing that people look at a lot of times in terms of relative dollar strength versus other major fiat currencies, especially the euro, has been pretty weak of late, and that's been helpful on the side of gold and silver for the last 4 or 5 months in terms of spot price. I mean, gold has run up in 1600s to now 1900s, and it's threatening to make a move toward the all-time record high not far away. And so silver at the same thing, it ran down, obviously 1718's lowest it got to in, I think, September of last year, and it's been running pretty good since, and it's threatening to make that move beyond 24. I know it's been consolidating back and forth for a while, but that's good. The longer it stays in a sideways consolidation, the more energy and power it stores when it finally breaks out. And if you know anything about silver, you kind of remember, if you look back at like 2010, there was times where kind of gold outperformed silver for a little while, and it kind of confused people, and people who were silver bulls were kind of discouraged by that action. That's what you want to see. You want to see gold lead in terms of a powerful bull market. You want to see gold do the leading first. It's only later that silver starts to outperform, and you start to see that gold silver ratio start to collapse. So for you to see gold, say, run beyond 2076 this year and go to 21, 22, 23, 2400, et cetera, that would be good. And if you see a situation where silver is not keeping up or falling behind, don't get too discouraged. Don't get too worried, because eventually the outperformance comes and you have a situation where the gold silver ratio will spike down, go below 70 eventually. And once it goes below 70, look out, because that's very bullish for silver in terms of relative value versus gold, and relative value versus pretty much everything else in the world.
So is that a situation where someone would want to then convert some of their gold into silver if we got down to that 70 to 1?
There are people who like the idea of doing that, and it's totally understandable. I think you got to get a little bit more aggressive in terms of weighting. You see the gold silver ratio go down to low 50s into the high 40s, back toward that 2011 low of 33. In that time frame, that's when some people might think about doing some swapping from one to the other. There's people, I personally believe we're going lower than 33. The 2011, was basically a preview of what's coming in terms of the bullion bull market mania that's ahead.
Right.
And so 33 to me is a conservative long-term target this decade at some point. Then the question is, well, how stupid does it get to the downside? And it can get real stupid. I mean, you have 8 parts roughly gold or silver coming out of the ground in the world versus 1 part gold. That's just the relative ratio, how it comes out of the ground. It doesn't necessarily mean that that's where it needs to be in value terms, but it's been in the teens before for thousands of years before in terms of the gold silver ratio. So you can have a situation where, we were at 120 during the COVID shutdown. So you can have a situation where that gaps down tenfold and gets into the teens. And so that would not surprise me in a mania to see something that crazy.
And I tell you, if it did get to that point, I would have wished I would have traded some of my gold into silver earlier, maybe even before 70 to 1, right? So gold's coming out of the ground 8 to 1 to silver. Or I'm sorry, silver's coming out of the ground 8 to 1 to gold. Let me say that correctly. Silver seems to have a higher industrial demand than gold right now. So what is keeping silver's price down? Is there just so much of it out of the ground already that we're good for a while, or what is it?
It's a combination of just-in-time inventory. How long can that last? And it's been slowly diminishing, especially the last few years. If you look at any of the major stockpiles in the world, between the fractional reserve COMEX, the pile of silver that's supposed to be there between the registered and the unregistered stacks, I mean, they've both been dwindling very quickly. And as well in London, I mean, you've seen major hundreds of millions of ounces flow out of London, most of it going to India this past year, which bought over 300 million ounces alone, that country, in terms of silver bullion. I mean, that's a third of new line silver for one country in all of last year. And a lot of that silver didn't come fresh from the ground. It came from stockpiles that were sitting in London and the city of London. So you also saw in the last few years, which has been an interesting, especially recently. I mean, you've seen a lot of Western ETF sellers, people who hold, say, unsecured shareholders in GLD or in SLV, who've been cutting their losses and kind of running away, because if price action isn't going to be a net positive on their balance sheet every quarter, then they have to cut their losses and run. A lot of people who manage money do that. So you see a lot of Western ETFs who've been net sellers the last few years. And so that bullion that comes out of those ETFs, a lot of it has gone to the East, whether it be China or to India. The question I have is, well, what happens when spot price, because right now what we're having is a weird situation where you had Western ETF sellers, but yet spot prices are going up. That's not normal. Something else is up. And so the question becomes, well, what happens when the spot price keeps going up and you get Western ETF inflows? You get Westerners wanting to momentum buy into silver. They see silver break out beyond 25, 26, say. They see a run to 30. They see a potential going beyond 30, going to 36 real quick. Those people want to scalp profits, and they'll buy SLV or they'll buy, Sprott's silver fund or this or that for a short-term trade. And all those flows end up having, those ETFs, except for SLV. SLV made a little change to their perspectives. If things are too tight, SLV says they don't have to buy bars. But other ETFs really do. They have to go out into the market and they have to find the physical bars and bid them. And that tends to make spot price climb very quickly. And so that's what I think we're on the cusp of looking at the second half of this year.
So what happens to physical price if that happens? I mean, do we see premiums move back up?
So the premium side, I think what you saw this past few years was a major amount of new currency coming in that wanted to convert that currency into bullion. And that's for the conservatives around the world, whatever country they're in. I mean, in Europe, you have record sales in terms of, the Philharmonics. The amount of gold Philharmonics they sold last year was an all-time record high. Perth Mint, same story in Australia. In the United States, very close in terms of gold coin sales. They haven't been able to keep up with silver, obviously, and that's why premiums got so stilly on the Silver Eagle. But in the end, as spot price starts to climb, it should close the gap a bit for those premium differentials. My assumption would be that you would have new money come in, but they would not put up with massive wide premiums like we've seen prior. And people who are buying in the 30s of silver, I'm sure they're concerned whether or not they're buying it at too high a price. But historically, $30 silver is going to be looked back at as being something that's going to be pretty cheap relative in terms of where it's probably going to go.
So do physical demand overseas play a part in premiums over here in the US, do you think?
So in terms of premiums in the United States, it's a lot of times it's more on the local level and then questioning what mint are these things coming out of, and who are the buyers, how many of the buyers are there, who are the dealers, et cetera, et cetera. That kind of gives you a feel for whether or not there's going to be a spike in premiums or premiums are going to thin down. I think we're on the thinning down side because we were at premiums that were higher recently. They peaked in October, I believe. In October, they peaked in at least Silver Eagle terms, and that generally leads most markets, Silver Eagle 90%. I think we peaked in October of 2022 last year. At SD Bullion, we have a YouTube channel. I made a video October 22nd, 2022, basically stating that the arbitrage play for someone who wanted to sell Silver Eagles and, for instance, go buy generic formats like 100-ounce bars or 10-ounce bars, that was live and well at that point. You could have sold Silver Eagles, for instance, and then turned around and flipped them into generic bars, et cetera, and probably gained 30-40% in terms of overall ounces. And so I took advantage of that. I didn't sell all my Silver Eagles, but I certainly sold a bunch of cases, because when you see a gift horse in the mouth like that, when premiums are that silly, it does make sense to take advantage of it and increase your ounces if you possibly can. So it was good because the video came out, and that really marked the top in terms of how high Silver Eagle premiums got. I believe there were bids that were $10, $11, $12 over spot at the time. And so I'm glad we made that video, and those people that took advantage of that situation are probably happy they did now.
I'm one of them, actually.
Good.
Yeah. Sorry, go ahead.
In terms of like the overall physical market, like last year, China came back, roaring back pretty well in terms of the amount of gold they demanded. I just saw a chart. They imported 1,350 tons roughly of gold. That's like a third of all the gold supply generally per year. You have about 4,000 metric tons of gold supplied per year. So to have China back in the market bidding and buying is a good thing. You want them to be buying physical, and a lot of Chinese housewives they stack a lot of high grade jewelry in that country. They're the number one gold jewelry buyer at the moment, with India just neck and neck with them, very close as well. So India as well, the amount of silver they bought last year was record breaking, 304, 310 million ounces, depending on where you look. That's a lot of silver and for just one country. And the thing I think about when I think about India, you look at like the two price charts long-term wise of the fiat rupee versus gold versus silver. And if you look at that long-term price chart and the annual chart bars, et cetera, you can see the gold is a cup handle breakout already. I mean, every year that's going to go by, it'll be a record high in rupee gold terms. But in silver, it's not even close to yet its highest. Maybe it's on the cusp of getting to its highest ever, but it's bumping up against that level. Once that breaks out, you're going to see momentum traders in India. They're also going to be switching from gold into silver because of a combination of reasons. When gold becomes unaffordable, what happens? People buy silver. That's
right. Yeah.
Generally what happens. So that's what's going to happen again. And you have 1 billion people who are increasingly getting wealthier as time goes on. And I would expect that silver demand will continue to be pretty robust. I don't know if it'll be record breaking this year. I would be shocked if they bought more than 310 million ounces this year. But, I could easily see them buying 250, keeping the pressure on London, where you have warehouses that are almost completely empty in terms of float supply of silver that's, easily shippable to India. So there's a whole confluence of factors in terms of demand that are coming down. And what's going to end up being the problem is there's not going to be enough to go around. And when that happens, you have to have spot price go up to pull silver out from places where otherwise it wouldn't come out.
Well, I think that's all I had, James. Was there anything else you wanted to talk about before we get out of here, though?
No, that's it. Just kudos to your channel. I appreciate watching it. I enjoy the call arounds and the voiceover effects that you have to use to make sure that everything's legal and on the up. I know that's difficult because statewide, different rules for different recordings of voices and stuff. So
yeah,
you do a real good job.
Unfortunately, I'm sorry, I didn't interrupt you. I was just going to say, unfortunately, there's states that I can't call: California, Washington, Florida, any of the two-party consent states where both sides have to know it's being recorded. But the majority of U.S. states, like 38 of them, is just one-party consent. So as long as I know that the call's being recorded, but even so, I find it best, the whole point isn't to call out and, berate a coin shop that may be offering too low. The idea is to, like you said at the beginning of the video, show people the importance of doing your due diligence and your homework to get the best deal for you. So
my hunch is that those 38 states that you mentioned are probably the same states that don't have taxes on bullion.
It probably is quite close.
I think there's only 8 or so states, and a couple of them are trying that. Like Mississippi may end up. I'm surprised they still do, but they have some legislation that they're probably going to be getting rid of taxes on precious metals. So we're going to be down to like 7 or 6 very soon. So
it needs to go. It needs to go away in all states. It really does. And I know Missouri actually there's a bill in Missouri. I doubt it's going to happen, talking about allowing gold and silver to be legal tender again. There's a lot of good movement on that side. I would love to see it happen. But yeah, taxes need to go. So I'm glad I live in Missouri. All right, James. Hey, listen, it was a pleasure to have you on. I'd love to have you on again, maybe next month if you're okay with that.
Yeah, I'm open to it. Just give me a shout.
So there you go, guys. That was James from SD Bullion, and I believe he had a lot of insight that I loved sharing with you on the channel. I hope that you guys enjoyed it as well. I hope to have him on again here in another month, so we will see if we can get him in here, and we'll get some more insights and updates from James. I do want to say thank you to SD Bullion for sponsoring my channel. You guys are awesome. Thank you very much. And additionally, thank each and every one of you for watching. It means the world to me. If you haven't seen it yet, go out and check this video up above. It's where I called around to a bunch of coin shops and tried to sell silver eagles with current premiums as I record this video, of course. Guys, thank you so much for watching, and we will see you next time.